Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. As the global markets continue to be thrown into turmoil following the recent Saudi Arabia's response to the collapse of the OPEC oil talks, the market overnight, after the flash crash to the lows of 63 cents, surges to an intraday high of 66.84 and managing to possibly squeeze out some of the short positions before turning around, and the bears are back into play and now looking towards the level of 65.45. I still hold the bear view, even though the short squeeze overnight wasn't enough to turn me, and therefore I do believe that we are looking still towards the 64 cent region, even though it was reached there yesterday. But any advances should still continue to fall above 66 cents. With trading coming at a high risk factor due to the volatility in the market and also the way we opened yesterday and escalated towards that level of 115, I do believe the market has posted a fresh near-term top at 115.1020 and therefore could see a turnaround back towards the bottom side around 113.40. Reassess from there, as I believe that was where the market needs to fill this gap after yesterday, and therefore once filled, let's see if we can continue to head lower. There's a little bit of divergence here, so keep an eye on that. Or will we see a rebound off this level of 113.40? So it does play quite an initial important, that is, role. The dollar yen has managed to recover since rebounding off the level of 101.45. It is assessed that we should see further tests towards this downside, but may first see a squeeze up towards the region around 103.45 to 95. From there, I feel the market will turn back to the downside and pressure the support. So keep an eye on the top side to shorten the market, as I do expect to see a turnaround very soon. And with sterling surging to 132, a good rejections come into play, and now may have caught the bulls off guard, and maybe a trap has been laid, and therefore could see the turn to 130.45 and maybe lower down towards the region of 129.90. Reassess from there. Any advances should continue to fail, as the market is getting a little bit possibly nervous as we get closer to the Bank of England's rate decision, which is on the 26th of March. Still little to say about dollar CAD at the moment, while oil still remains around the $30 handle, or getting up just above there, about 32. But still, there's a lot of work to do on the downside to turn this picture around. So at the moment, I'll remain neutral. As you can see from the shorter term picture, that the support level for gold is at 1,656 to 58. Now, if we get a break beneath there, could give further exposure to this stab level, which comes in around 1,640 to 42. The swings are very big, and therefore do be on your guard if you're trading, due to the fact is that the high volatility in the market is going to make it very, very difficult to trade. So therefore, do be on your guard there. But while we hold above 56 to 58, could see a little back up towards this 88.92 resistance. And finishing off with oil, the market has still got a lot of work to do. We've got to get above the level of $35 a barrel to start filling in this gap, which can be anywhere towards 38 to 42. I still feel the market has a lot of work to do, and therefore could see a possible down test, maybe again if we don't get this gap or break above 35 soon. The key level at the moment is at 27.40.80. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new day.